Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for April 23rd, 2024. Well, let's take a look at what happened overnight. Really quickly, I'm going to run through just some tickers and things that I look at here in the morning. First off, we had Asian markets, and they were mixed last night with South Korea down, Shanghai down just slightly, but the rest of those markets were up and looking pretty good overall. European markets are decidedly bullish this morning with the DAX up a full 1% this morning. And we even have UK's FTSE 100 at fresh record highs this morning. So they're looking decidedly bullish. Here in the US, we have a climbing a group of futures here this morning. We've had several earnings reports out already, and the Dow futures have improved as a result of that. We've got Dow up, we've got SPY, the S&P 500 up, and we've got NASDAQ up. We're looking at about 25-30% gains so far this morning. Let's take a look at what is happening in oil this morning. Oil, kind of flat, just a tiny bit down, just 16 cents at 81.74 a barrel. Brent is down 10 cents at 86.90 a barrel, and natural gas is just barely up about half a cent. If we take a look at precious metals, they're continuing to fall. And boy, gold had a really rough day yesterday, falling more than $70 an ounce. This morning, gapping down again, down $30.50 an ounce. At the moment, silver is down 33 cents. We've got copper, platinum, and palladium lower. And if we take a look at cryptos, Bitcoin is currently down 89, almost 90 points here, and a little bit of mostly red across the board on those cryptos this morning. If we take a look at our bonds today, our bond yields, 2-year bond yield is at 4.98. It's climbed back up just a little bit. 10-year bond has slipped a tick or two to 4.61%, and the 30-year is at 4.71%. So we still have this major problem in the bonds that we're going to have to deal with. So what does all of that mean for today? Well, why don't we settle in? Let's buckle up. Let's get ready for the Tuesday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I very much appreciate it. Let's take a look at what's happening in these charts and see if we can figure out how we might want to approach the market for today. Remember, one of the first things we want to do is set aside our bias and really look at the charts for what they are, not for what we want them to be, and see if that helps us do a better job at preparing for the day. So first off, if we take a look at the diamonds, you'll notice that we finally holding this support, and we broke that downtrend here in the chart and had a good push yesterday, but boy, by the end of the day it faded back pretty substantially with a lot of uncertainty about the upcoming earnings that we have, and we have a big slate of earnings today. So taking a look, if we can continue to find that bullishness, once again I'm going to go right across here, say we need to break out above and hold above that big black candle and push on through that area of the chart. And you can see we've got a little bit of price action right in here that would suggest a tiny little bit of resistance. And then if we can continue to push through that point, then I'm going to look right up here at this bigger resistance area in the chart, and there's substantial price action resistance there, and even more substantial price action resistance here. A lot of consolidation in that chart, so watch those areas here as we move up. And you'll also want to be paying attention if the bears were to find inspiration today. I would suggest a pushback if that were to occur, probably right down into here. That'd be the first level that we would test as support. And if we were to break down through there, well, then we're coming right back down here into this consolidation area. Beyond that point, it looks to me like we would come all the way down into here, maybe just a tiny little bit lower than that line to find the next levels of price support in the chart. Now, if we take a look at our moving averages, clearly we still have overhead price resistance here and considerable overhead price resistance. So when I put those lines on there, I want you to notice this major area right here is going to be the area of contention to the upside. And as we rally up there, it's going to be kind of up to those earnings whether or not we can blast through that, or if we remain underneath this area and have that possible 50-day moving average lowering, that we could fail and start rolling back down. So watch carefully if we see that. And that's really very similar on all the indexes. Let's take a look at our SPY. SPY pushed back up yesterday, but clearly it wasn't as bullish as the Dow. Kind of an inside day here, a little spinning top doji, and we're trying to push through here this morning to the upside. Notice that if we can continue to shove up here, we would look for a resistance right in there. If we can push beyond that level, then we're going to be looking up into this next area of the chart, and that's a pretty good stretch up here. We might find a little bit of resistance right there in the middle of that range, pushing up into here and then on up into there. Once we get past this area here, well, we're going to be running into a very interesting area of price resistance and downtrend here in the chart that we'll want to be watching pretty closely. And again, that grouping of moving averages starting to show resistance up here could pose a problem. And then if we take a look at the bearish side of things, if the bears were to step through, where would we go? Well, first off, I would look for a test of this area right in here, catch that little tiny area of support in there, and then probably a pushback down here to retest these lows. Beyond that point, we're probably looking at some ugliness coming into the market in if we were to push back down and pass through new lows. And I think if that were to occur, if we were to go there, then we would start actually worrying about the 200-day moving average coming into focus. But kind of keep in mind, as we rally up here, we've got this accumulation of moving averages that could provide us that resistance. Remember, big tech earnings, we can ignore that so easy. On big tech earnings, we can blast right through, because of the Mag 7 companies, they make up an entire 30% of the S&P 500 now. Just 7 companies make up 30%. So we'll want to keep an eye on those. If we take a look at our QQQ, well, QQQ still had a little bit of a rough day. There's quite a little bit of uncertainty in here, and you can see kind of a spinning top doji in here. We tried going both directions, didn't really get a lot of traction on the day. If the bulls can continue to follow through this morning, you can see gapping up once again. We push up into here. We'll see if we can hold and break out of that big black candle resistance area in the chart. And pushing through there, once again, I think there's kind of a mid-level right through here that we might test as a resistance, and then beyond that, we're pushing right up into these levels of the chart. Now, keeping in mind that if we look up there, we've got a long ways to go to come into that big accumulation of moving averages. So big tech, if they can really get going here, and every reason to believe they could, then we might push right up into this resistance area all the way up there on some really good reports this week. Be careful, because there's likely going to be lots of volatility around these reports. Now, if the bears were to find inspiration here today, and I think there is reason for that possibility. One of the first, big tech reports is going to be coming from Tesla. And Tesla's not been looking so good here at the moment. So we'll want to watch that pretty closely. in here. If we were to fail from this resistance right in here and push down, well, the first area I'd look is testing that low. Beyond that point, I think we're coming down into here, and then we start drifting lower into these next levels in the QQQ. Now, unfortunately, the QQQ has that opportunity as well, that if we fail in here, that we could seek out that 200-day moving average rather quickly, because I think the CTAs, the computers out there on the backbone, they're owned by the institutions. They are still extremely long the market. And there's been lots of warnings from Goldman Sachs, even Bank of America, that any downside pressure in here, remember, these machines are trend-following machines with no one making the decisions for trading. It's all algorithmic trading. They will follow the trend. If we start to fail, look for those to really start to sell off. Could be ugly if that were to happen. And then let's take a look at our IWM. IWM also rallying up yesterday, and look at that. We found this resistance right in here in that chart, and we kind of stopped on the day, pulling back just a little bit into the close. So if the bulls can find inspiration here today, well, I'm going to look for that opportunity that we break, and this is more of a trend line than a straight line, to break that and see if we can push up into areas of the chart up in here. Now, of course, when we get up here, we're going to be running into a downtrend here into the Russell. So watch that carefully here. Pushing up through there, we would come up into a pretty substantial level of price resistance in IWM. So we'll want to watch that. And of course, up here just above that is our moving averages, and that accumulation up here of significant resistance in the chart. If the bears were to find inspiration today, well, then once again, I'm going to look for that pushback, and we would retest this area of price support here in the chart. Breaking down below that area, I'm going to suggest we come down right through here, test that area, and then right down into this level of the chart if the bears were to get going. Beyond that, it gets pretty ugly. We really start drifting heavily to the downside. And you'll want to notice that the Russell here is not far from its 200-day moving average. So a failure in here, we would likely get drawn down into that 200-day pretty quickly. Let's take a look at our VIX this morning. Our VIX pulled back sharply yesterday. Those fear really dropped out of the market. Even though we had some pretty heavy selling going into the close, we still held that VIX to the downside. So we come back down and we're testing some support here in this trend in the chart. If the bulls can continue to find that inspiration, I would look for that to push on lower, maybe even break this trend to the upside. We'll be watching for that. And if the bears were to find inspiration today, well, then we would look for that bounce off of this area and maybe a little bit more fear coming into the market. Let's take a look at our T20s. Our T21-22 had a nice little rally yesterday to the upside, broke above 50%. But here's a problem. When you think about how much T21-22 moved, and if we compare that with what happened in the NASDAQ and the SPY, that are bigger indexes, well, we didn't get a whole lot of price move out of those, a whole lot of improvement for such a rally back here to more than 50% of the stocks above their 50-day. So we want to think about that. If we have good bullish inspiration today, well, we certainly have more upside opportunity before we hit this up here, but you're seeing in how far we moved yesterday, we could quickly be back up here in the bearish reversal zone. If the bears were to find inspiration today, well, we've got about an equal amount of opportunity for them to act because we have relieved that oversold pressure here in the market. If we take a look at our T2108, the percentage of stocks above the 40-day, had a nice little rally on that yesterday, but you'll notice it wasn't super impressive. We're looking at 32.74% of the stocks above their 50-day or above their 40-day moving average. I don't know why they chose a 40-day for this indicator, but if it were me, it'd be 50. But if you take a look across here, we've got some resistance that we're coming into that chart. If we can break through that today with a bullish move, then I would start looking for us to start pressing up toward that 50% area here in the chart. That would be a nice improvement on that average. If the bears were to find inspiration and we were to break back down, well, we're going to start probably seeking levels of price support here in the chart if that were the case. If we take a look at our T2107, now T2107 did a good job yesterday pushing back up, holding above its 50%. So the vast majority of stocks out there still, well, not the vast majority, a little more than half, are holding above their 200-day moving average and looking pretty good. I want you to notice that we're going to be running into a little bit of congestion resistance area between here and here. We'll want to watch that carefully as we push up here in the chart. If we were to fail from here, if those bears find inspiration, then I'm probably going to be looking down in this range, breaking down below that 50% area here on T2107 if the bears were to re-engage. If we take a look at our T2101, well, here's our problem that we had yesterday and why we ended up fading back. As we were selling in the market, we had plenty of breadth. The breadth was really strong on the sell side. As we tried to rally back up in the relief rally, we faded significantly here. Just not as much enthusiasm, at least yet, to the upside. Perhaps these big tech earnings reports will help that this week, but we'll want to watch that pretty carefully. If we were to continue to fade on this buy wave to the upside, that's going to embolden those bears. If they get any hint of a problem, that's going to likely bring them in on a full-on attack. Now, if we can get the relief rally to start showing an improvement in the breadth, that would help an awful lot. So watch that pretty closely here as we progress in this relief rally. Let's take a look at our economic calendar for today. And our economic calendar, well, we've got a couple things to think about, but it'll probably be much overshadowed by the earnings reports today. First off, we're going to have a PMI flash. They're looking at that PMI flash coming in at 51.9. Remember, anything above 50 is showing technical growth in the marketplace. So watch that carefully if we can continue to push and hold up above 50%. If we take a look after that, we've got a new home sales report. They're looking at 670,000 coming in today on the new home sales. Now, to me, with the rates having risen the way they are, I think there's a pretty good chance this one would be a miss today. We'll want to watch that closely. I don't expect to see this improve, but that's just me with the way the rates and things are progressing here in the United States. That would maybe be a problem, so watch carefully there. And then after that, we're going to have a Richmond Fed manufacturing. They're looking for a negative, last time was a negative 11. Manufacturing continues to be stressed, very stressed. We'll get some bond announcements, a couple bond auctions, 2-year bond auction, and a money supply. Now, the 2-year bond auction should be rather interesting today because it continues to creep toward that 5% handle in rates. So watch that carefully. Depending on how that bond auction goes off today, could be really important. As we look into Wednesday, just kind of be prepared. We got mortgage applications, we got that durable goods report, a petroleum status report, supply business survey of business uncertainty, and then some bond auctions here on Wednesday. And then, of course, everything is going to culminate with big tech reports starting to hit Wednesday and Thursday, and we're going to hit GDP and we're going to hit that core PCE. So be prepared for just about anything. Market could become very volatile over the next several days of data. Let's take a look at our earnings calendar here for today. Now, our earnings calendar is a big one, and I apologize. Yesterday I messed up in the blog. I'll get that posted here today. There's just no way I can cover all of the earnings reports here for this morning. There are a bunch for this morning and this afternoon. We have already heard from like GE this morning. We're going to hear from Freeport here this morning. We're going to hear from some utilities here today, NEE. We've got Kimberly-Clark this morning. We've got Spotify will be reporting today. So lots of reports coming in, including Lockheed Martin. Just be ready for just about anything. And then this afternoon, the most notable is going to be Tesla. Will be reporting this afternoon, so kind of keep an eye on that. Along with that, we're going to be hearing from like Mattel will be reporting. We're going to hear from Texas Instruments. We're going to hear from Visa, and STX is going to be in there. STLD is going to be in there. So quite a few reports here this afternoon. Going to be a lot of emotion running through the market here over the next several days. Let's take a look at a few stocks that could be setting up for today. But before we do that, everyone, if this is the first time you've seen these videos, if you could please do me that quick favor, and that would be click that subscribe button. Also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you can do me that favor, please click those thumbs up buttons and leave a brief comment. Remember, guys, even an emoji counts as engagement with the video and helps the algorithm to show these videos to more folks. And I just want to say thank you so much. You're keeping me busy answering all these comments. So thank you so much for everyone who does take the time to do that. I truly, truly appreciate it. Let's take a look at some stocks that could be setting up for today. But before we do that, everyone, we want to remember that these are not recommendations to buy or sell any security. You've got to do your own due diligence. You should never ever blindly follow anyone else's trade ideas. Make sure you're following your trading rules, your guidelines, and your tolerance for risk on every trade that you take. And just realize that we're likely to see a very volatile week ahead, and it's likely going to transition into next week as well. Just extremely volatile, looking for big pops and drops and huge whipsaws are likely in the market. So just make sure you're planning carefully for those. Let's take a look at a few of these stocks. First off, if we take a look, RTX, I mentioned this one yesterday, and RTX continues to set up in this pattern in the chart. One of those aerospace defense companies, and of course we've got an awful lot going on in aerospace and defense right now with all of these wars going on around the world. We'll want to be watching this carefully for that potential that could pop on through. And LMT, Lockheed Martin report, could help out. As you can see, LMT reporting today, trying to pop this big resistance area here in the chart. If it can push through that, we'll be attacking this area of resistance in the chart. But you can see in here, looking at what we've got going right now, we're breaking that downtrend. We're holding a higher low, starting to begin that uptrend here in Lockheed. So watch those carefully. If we can get good reports and push right on through, some of those defensive sector stocks could really start coming up. Take a look at General Dynamics. General Dynamics also trying to break that little downtrending move here in the chart, showing that bullishness. Watch that carefully. It's going to be reporting tomorrow, so I wouldn't be jumping on it or chasing it right now, but all of these are going to be reporting here soon, and there could be some upside coming in those. Let's take a look at some retail in here. Boy, we've had kind of surprised yesterday that retail surged as much as it did, considering the condition of the overall market. But that being said, we've got a little W formation here, possible double bottom setting up here in Walmart, and notice that we're coming just up through that downtrend here this morning, trying to poke on through, getting some bullishness coming in there. Now, one of the things, Walmart is in that consumer defensive sector. It's a good dividend payer, and it's one of those places that people will go to seek a little bit of safety. Now, that being said, we could easily push this right on up into here, break through that resistance, and then I think we're looking at that opportunity that we could really push on through and maybe reach some all-time highs. And a lot of times we see stocks like this move on up. This is not going to report till middle of month next month, and just anticipation of earnings. If the earnings start coming in really strong, then we could have that anticipation of those earnings coming in and see stocks like this pushing to the upside. If we take a look at Costco also had a little bit of a bounce there yesterday. Notice we've slipped out from underneath this downtrend, tested that resistance and failed with all that bearishness that we had last week. But if you'll notice in here, holding that price support, we'll want to keep a pretty close eye on that. If this starts holding this higher low, pushing on up, there may be that opportunity we start making our way to the upside here in Costco. So watch that carefully. This afternoon, we're going to hear from Visa. So Visa has been moving in a pretty nasty little choppy downtrend. We did break the support in the chart, but notice we got a little bit of bullishness coming in there yesterday, trying to push this up. Now, I certainly wouldn't want to be jumping on this ahead of the earnings, but watch this closely. If we're going to start seeing some of those things come back around, pay systems come back around, they tend to move together. So watch Visa, MasterCard, American Express. They can all move in that bullish manner, and we can see American Express has already had their earnings, and it's already making that nice little breakout here to the upside. So pushing through, any rest or pullback in here, I think sets up the trend for that upside move in American Express, if we can continue to get those moving that direction. If we take a look at stocks like SQ, well, not so good here on block, still running in that downtrend. As a matter of fact, I would suggest, unless we get some kind of really good earnings report, this may fail underneath that downtrend and continue to move lower. And I'm even looking at PayPal, and PayPal is something that I would like to pick up for a longer term trade, because we're breaking this big long-term downtrend, trying to hold in here. It's really going to be important how this turns out here on the 30th. But if you watch that moving in this weekly upside trend, this nice little pullback to support, maybe see that opportunity that could push up and start to recover here in PayPal. Obviously, it could easily go the other direction as well, so make sure you think carefully about the risks that you take on any of these charts around these earnings reports. And my goodness, there's a lot of them here coming up, a lot of them. Take a look at Altria. Mo had a pretty good run here, broke this downtrend, really sharp run, coming right up into this resistance here in the chart. Now, if we could rest up here, pull back in here, put in that higher low. If you notice, if I were to put in a lower high in here, a higher low in here, what I just drew out is an inverted head and shoulders pattern. So keep an eye on Altria. It may even have enough energy that it could pop through up here and hold. Remember, it's coming into its earnings on the 25th, so you're going to have to wait on that. But Mo's coming around. Again, that consumer defensive area, 3M, has been trying to come around, get a little bit going in here. I would watch that. Mondelez, been trying to break this downtrend here, pushing up again. Consumer defensive, we're seeing those staples trying to come back up. Watch that carefully. Don't chase this move. Wait for the higher low to come in here. I'm guessing earnings are going to mess that up completely, but worth keeping an eye on. Let's take a look at energy. Energy had a good day yesterday, even though those oil prices and gas prices were moving just slightly lower. XLE finding this support, trying to push back through to the upside. I think it's worth keeping an eye on that. You may look inside that at some of the stocks like ExxonMobil. If we look at ConocoPhillips, a lot of these starting to show a little bit of hold of support. Halliburton trying to catch in here just a little bit. Schlumberger, not looking good here at all in Schlumberger. Coming down into this price support, we might catch a bounce, but until we break out of that downtrend here and hold a higher low, I have no interest in it for a long at the moment. So there's a mix of data in here to be watching for. You're going to have to pick and choose pretty carefully. Let's take a look at our US dollar. The US dollar popping up here yesterday and then pulling back. We'll want to watch this pretty closely. If our bond yields continue to rise, notice that we're running in this upside trend here on UUP, and this is putting tremendous pressure, particularly on big tech that does heavy borrowing for their research and development. So watch this closely as this consolidates out to this trend. If we find more strength in this area and start pushing on through, that's going to be problematic for the NASDAQ. So keep a close eye on those bond yields. So with that, everyone, I want to wish you all a fantastic day. I want to wish you great results in your trading. Notice, by the way, I really didn't cover any of the big techs because I think anything is possible. We could have giant gap ups, giant gap downs. We could have big whipsaws in those as they report. They could just go flat sideways with uncertainty. So make sure you are planning very carefully and not just chasing these earnings reports, because there could be some very big moves and some very dangerous trading for the market. So with that, everyone, I want to wish you all the best, and I will see you right back here bright and early Wednesday morning. Have a great day, everyone.